Here you can see that we've got all our lodged activity statements showing in our GST grid analysis. So the way to get to this is through here and simply set your time frame, which is in this case for the 2019 year. If you don't see your activity statements here, load them in from the ATO. In this case, they are in the system, and you can see each of these are activity statements, and it's quite possible to right-click, or sorry, no, you can't right-click, but you can certainly click on that, open the activity statement, and view the information. So let's just go back to that GST Trade Analyzer, and you'll notice that what we've done here is we've gone and we've collected the GST summary reports for each of the quarters from, in this case, it's MYOB. And what we've done is simply keyed in the values. So we've keyed in the sales, keyed in the GST on sales, and keyed in the GST on purchases. You do want to be careful to make sure that you're consistent with, in this case, you can see GST included, so you've got the option to say yes or no, and you'll see that if you say no, well then that doesn't make sense, right? So you've got to consider whether you are reporting your GST inclusive or exclusive on the activity statement. And don't forget to click save, so make sure to click save once you've made any changes. What you'll notice now is that we've done a comparison, and at least in this case we've got no variance. Now possibly month by month there may have been a variance, which you can see there was. So sorry, quarter by quarter. So in that quarter there was a variance between the activity statement lodged with the ATO and the report generated out of MYOB for the GST summary that we've used to fill this grid. Anyway, what you can see is that overall we've got no variance, and that will tell you that probably the June BAS was amended to get this perfect outcome. And that's always the easiest way to handle your year-end GST analysis is prepare the analysis, and based on whatever variance pops out at the bottom, simply go and amend that fourth quarter BAS, which you can do up to a value of $5,000. Now you'll note that the GST analysis was carried out on a cash basis, but our accounting is on an accrual basis. So to figure out what our GST balances should be on our balance sheet, we need to consider the GST on accounts receivable and the GST on accounts payable. So you can see here we've reported the total accounts receivable, and the way we've done that is simply to fill in per the trade debtors, which is your accounts receivable, the total outstanding, which is the total of your accounts receivable outstanding at 30 June, in this case 2019. And you'll notice that when we've reported it, we've also said, well, of that accounts receivable, we've got that much of GST, because we need to consider this with respect to our accrual-based accounting. And the same thing applies here from the accounts payable perspective, exactly the same thing. So you can see here, what have we done? We've reported our accounts payable gross and the GST on it, which if we save that, you'll see breaks down to that will break down automatically for us. So you can see the 4823, which is probably the 1/11th. And the reason that we're doing this is because we can't be 100% sure that our accounts receivable and accounts payable values are completely resolved through the GST system. Some of your accounts payable might be GST free, and some of your accounts receivable might be GST free. Perhaps you're selling to to an overseas customer, for instance. Now, once you've put in your accounts receivable, accounts payable, then you can use our reconciliation analyzer. So the reconciliation analyzer, you need to just use it like this. So the accounting basis is accrual. We've selected our fourth quarter BAS, and per the BAS, which was on a cash basis, so this is our fourth quarter BAS, we've got GST on sales of that, GST on purchases of that. And we know that based on what we've just filled in for our trade debtors and trade creditors, we've got GST values on those totals of that and that respectively, right? So given that this is on a cash basis, so the BAS is on a cash basis, and that simply means that from an accrual perspective, the GST on your debtors and creditors are not in the BAS, but they are in your accounts, because your accounts are done on an accrual basis. That means that your GST on the sales that you've booked but haven't collected is not yet due and payable, and therefore not in that BAS. And the GST on your trade creditors, which are expenses that you've booked on the accrual basis pre-30 June 2019 in this case, they're expenses for accrual purposes, but you haven't paid them, and therefore, because we're doing our BAS on a cash basis, what you'd then expect to see on your balance sheet is these figures here. So either you're going to have two figures, the GST on sales, the GST on the purchases, that as a liability, that as an asset, or offset the two together, and that is the liability. So that is how you can understand three things in this case: the GST grid that we showed you through there, the accounts receivable and accounts payable values and why you need to include those, and then finally the true balance, in this case, the reconciliation analyzer that will help you to check to make sure that your values for your GST outstanding per your accrual balance sheet when you're reporting your BAS on cash reflects the correct liability or possibly an asset.